Hello and welcome to NIFA's webinar series. My name is Stacy Fatinos and I am the Homeownership Operations Manager at NIFA. With me today is Susan Laver and she is our Homeownership Team Leader. This webinar focuses on NIFA income. I'm passing control of the webinar to Susan now. She's going to walk you through information about NIFA's income. We will be back at the end of the presentation with some brief closing comments.
Good morning. We're going to talk about the income documents that NIFA requires in our pre-closing package. NIFA versus the underwriting income. NIFA's income includes all forms of income, and we also include anyone who's in the household that is 18 years old or older that has any type of income. As your underwriter, they will only count, your borrower, co-borrower, and a co-signer. NIFA, however, does not include co-signers or occupants or anyone that's under the age of 18 that is not employed. NIFA includes all sources of income for every household member that is 18 or older who will occupy the property. NIFA includes full-time, part-time, seasonal, temporary, any type of self-employment, if your borrower is receiving any unemployment, child support and alimony, any VA disability, or Social Security income. NIFA projects out the next 12 months for going forward, unlike your underwriter. We also include more than just the base income for your borrowers. We include overtime, bonus, commissions, shift differentials, salary in lieu of benefits, and per diem unless you can offset those expenses. Documentation required for our income. For the employment, we do require 30 days consecutive pay stubs for full-time and part-time jobs, a full written VOE. If you have employment where you have the W-2 for the previous year, if you do not add it to the 1003 and reflect an end date, we will ask for termination VOEs. Termination VOEs can be actually verbal, but with employment, it must be written. Our assets we require for deposit accounts, either 1 month checking and savings. We require the most current retirement account, 401ks, IRAs, Roths. We require 1 month for a health savings account and any type of stock or investment accounts, just the most current with the balance. Miscellaneous things NIFA requires are the most 3 years tax returns. Those will need signatures unless you provide tax transcripts. We do require child support or spousal support documentation, and we want the judgment number. Social Security award letters must be for the current year. And if you have a self-employed borrower, we do require year-to-date profit and loss statements. On your borrower's pay stubs, what type of income should you look for? NIFA reviewers review pay stubs for all forms of income that NIFA uses. As we discussed before, regular pay, any type of difference pays for differentials, bonus income, shift pay, tip income, overtime, and such, commissions. Here's just an example of a pay stub. When NIFA will look at this, we're going to see there's a differential. So if they're working a different shift other than shift 1, he's getting $3 more an hour. We are going to have to include that in income. He's got overtime pay in there. We have shift pay 1 and 2. And then there's also a weekend premium. You want to make sure that you include all these different types of income in your income calculation. Again, on a pay stub, we can see that they have incentive pay or supervisor premium pay. Again, those are in addition to his salary. We would also have to include those in the income calculation. The one on the bottom shows that there's a night shift pay. Again, we're going to have to include that. And a lot of times you can't decipher how many hours is in that. So we would do a year-to-date calculation on those. Pay stubs. What type of assets should you look for on a pay stub? When you review the pay stubs, NIFA looks for all types of assets: retirement accounts, any type of 401k, health savings accounts, and checking and savings accounts that the borrower deposits into. Here's an example, two examples of different pay stubs. The top one, as you can see, they have a retirement plan. So NIFA is going to require a retirement account statement. Same at the bottom, you have both a checking account that they're being deposited into and a HSA account, or the health savings account. We are going to require statements for both of those, even if they're not listed on your 1003. Written verification of employments. NIFA reviews the VOEs for the borrower, co-borrowers, and occupants. They must be complete and have year-to-date information. If it's included that the borrower is getting a raise, we'll have to count those in the household income. We don't count it for the full 12 months, however, we just count it for the portion of the 12 months that they are actually going to receive that raise. That has to show a start date and an amount in order to include those. Did the borrower work overtime, and do they receive bonus or commissions? Here we show two types of VOEs. As you can see in the first square, there is overtime and there is bonus from the previous year. We will include that all in the calculations. If, for example, the borrower hasn't received a raise in the last year, we can actually average 2018 or 2019 together in this situation. If you look and see over here on the other side, the borrower is potentially getting a raise in the next year. So we're going to have to count that 25 cents an hour for 40 hours. And like I said, up to that 12-month period, depending on where you are in the year. For a work number VOE or automated VOE, we're going to look at the pay cycle. We're going to look at the rate of employment or rate of pay. And we're going to look to see overtime, the commission, the bonuses, and we're going to decipher what that other income is. So we're going to calculate, look at this against the pay stubs. A lot of times employers include other income as maybe vacation time or holiday pay. Obviously, we would not count that other income then, because that would be counted in the base salary itself. If you're doing a year-to-date, however, we would have to count the other income in a year-to-date total. This is just a copy of our income worksheet. Once NIFA calculates the income, we do put a copy out in Lender Online under the eDocs in the pre-closing package. Once we have it approved, you would go out and get that and print that copy off and attach it to Form B for the closing documents. Please remember that NIFA income and the qualifying income are two different things. With our conventional products now, both Fannie and Freddie, you have to be under the 80% AMI income in order to receive the lower coverage, MI coverage for that loan. NIFA income, of course, we are counting forward, projecting forward the next 12 months of income, and we use all sources and anyone who's 18 or older in the house that has income in that calculation. Your Fannie and Freddie qualifying AMI income is going to be taken off your off the DU findings. That number has to be below what their numbers are for your 80% AMI. So always make sure that you look for that to see if you have to have the lower or higher coverage.
Hey again, thank you for joining Susan and I today for this presentation. As always, our team is available for questions. Our homeownership team is shown on the slide below, but it consists of Susan, Shelley, Mish, Stacy, and Jackie. You can reach out to any of us at the phone number 402-434-3900, or you can always email us at homeownership@nifa.org. We do appreciate your time today, and we do thank you for your participation. Hope you enjoyed the presentation and have a great day.